Hey there, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into Next Level Charting. Thank you very much for joining us. I appreciate it. If you're watching this video on YouTube, and you like it, of course, please give us a thumbs up and consider subscribing. So today we're going to check in on the broad market environment, the market regime, because it's the most important thing that we need to consider. But even though I'm still in a bear market regime right now, I'm in the bear market camp, which means risk is above average. There are 7 themes that have emerged over the last 4 weeks. I want to show you those on a perf chart, and then we're going to chart those individual ETFs that relate to those themes. So when I think about the broad market environment, I like to use a weight of the evidence approach, and that is with the composite breadth model. And there are 5 inputs into this composite breadth model. There are a couple of trend models, there are a couple of thrust models, and then there's the S&P 500 200-day cross. And we can see here, there's the 5-day in green and the 200-day in red. And we've had a big move up here, and you can see the 5-day is closing in on the 200-day there, and it's 0.71% below as of the close on Tuesday. And this will be updated after the close on Wednesday. But, you know, I don't think we're going to get a cross. Maybe we do, maybe we don't. But I use this composite breadth model here, and you can see that's at -3. And that means 4 of the inputs are bearish. One of the inputs is bullish, and it's been bearish since the middle of February 16th. And so regardless of what's happening in Ukraine or in the world or with inflation, this tells me what's happening underneath the surface in the stock market. And right now, the composite breadth model is bearish. And if we look at the percentage of S&P 500 stocks above the 200-day, it's at 49.4%. And it's been oscillating around this 40% level since it first moved below 40% there in late January, which is my bearish threshold. And it's got to get above 60% to turn bullish again, because I put my bullish and bearish thresholds just above that midline, 50%. Because if you use 50%, you're going to get a lot of whipsaws. And to reduce those whipsaws, I put my bullish threshold a little higher at 60%, and my bearish threshold a little lower at 40%. But the bottom line here is the weight of the evidence is bearish. At least it's not bullish as far as the broader market is concerned. And that means if you're looking to go long stocks or ETFs that are stock related, you're going to have a headwind. Now at TrendInvestorPro.com, I do keep track of the market regime every week. I've got a special page for that with all the breadth indicators, as well as the yield spread charts, and of course the composite breadth model. I've got an ETF trend signal table, and this week I was doing some analysis on Tuesday with some 7 themes in mind that I want to cover in a second here. But I was looking at the charts for SPY and QQQ on Tuesday. And here's the chart for SPY. And what we can see is, you know, it is kind of tempting in a way because, let me see if I can get this, because I'm working right off of the commentary that was posted on Tuesday morning. And we can see here, it does look like a bullish wedge. And we do have a wedge breakout working here. But we can see the trend composite, which is the trend indicator for the S&P 500 SPDR here, is negative, -5. The 5 days below the 200-day. And we can also see that this price thrust indicator I have, which is a 20-day point change divided by the 20-day average true range. And basically, when you get above +3, it means you've had a 3 ATR advance. That's green, that's bullish, and that's what we got with this breakout here in October. And then in late January, we got a 3 ATR decline. And that is bearish. It shows a price thrust to the downside. And that needs to be reversed with a price thrust to the upside. And we have yet to see that. So obviously we had a big world event 4 weeks ago when Russia invaded Ukraine. And the S&P 500, NASDAQ 100, they're up like 5%, 6%. Russell 2000 is also up. So stocks have taken this event pretty well. But not all stocks are acting equally, and I was wondering which groups have been outperforming. So I ran a scan, and I ran a scan on the 19-day rate of change because it's been 19 trading days since the invasion when I ran this scan on Wednesday. And I sorted by the percentage change. And this can tell us which groups were leading since the invasion, are leading since the invasion, and which are lagging. If I reverse this sort here, obviously Russia is lagging. But we can see China technology, Philippines, China, Italy. It's no surprising Europe is lagging. Platinum Trust, for some reason, is lagging. Germany, European financials. And then if I reverse this to get the leaders, we can see some themes that are emerging here. And the first four are related to energy, solar energy, clean energy, and uranium, fossil fuel alternatives. Wheat is commodities. Metals and mining, that's mostly steel. That's commodities. More green energy. And then we get oil and gas and again steel. So we're getting a commodity theme. And then we get to defense and aerospace leading up much more, 3 times as much as SPY. Cybersecurity also showing leadership with a big gain. And then we have transformational data sharing. I'm not sure what that is. But again, here we have aerospace and defense. So just by looking at these, we can see that there are some themes emerging since the invasion. So I picked out some ETFs that relate to these themes. Now, this is on the close on the 22nd of March, but you can see SPY, QQQ, and IWM are all up and up sharply. Semiconductors are lagging, only up 5%, up less, so relative weakness. But there we can see cybersecurity outperforming. This is CIBR. XLE Energy outperforming. There is Clean Energy PBW up 27%. So these are the leaders. Defense and Aerospace XAR up 15%. Metals and Mining XME up 22%. Agribusiness MOO up 14%. Gold miners, not as much. They're up 8.7%, but they are outperforming. This is a volatile one, though, but gold is in an uptrend. So if we look at some of these price charts here, I've got the trend composite here on the lower indicator window there, and this is Cybersecurity ETF, CIBR. But what I was noticing at trendinvestorpro.com was cybersecurity was holding up better than the other tech-related ETFs. First of all, you can see it basically held the January low in February, and then it formed a higher low from February to March. And during this period, most tech ETFs, software, cloud computing, and such were making lower lows. So this showed relative strength. And then cyber was the only one to break above that February high there with that surge in late February, early March. And then we had a flag pullback and then a breakout here. So it looks like it is ready to continue higher. The trend composite is yet to turn bullish, but it's a lagging indicator. But I suspect it will trigger bullish by turning positive in a few days. Note that this indicator is available here on the lower right. You can see the plugins, and there is the Trend Investor Pro Indicator Edge plugin. So click that if you want to learn more about this plugin. So outside of cyber, of course, we have energy, XLE, and no surprise here, it's been in an uptrend since late September. So basically, you had this breakout there that was picked up by the trend composite in late September. And then you had a pullback. And that's what we look for, is pullbacks within uptrends. And then we got the breakout from that pullback, and we had a little flag there and a flag breakout and a dip, but a bounce. So there's clearly an uptrend and a leading uptrend in energy. Then moving on, if we look at clean energy, which I'm using PBW as the reference here. Now, what I want to do is kind of back this out because I showed this a couple weeks ago. But basically, this is like a 500% advance, insane. And then you can see you have this big what looks like a correction, but it's lasted like a year. So that's why the trend composite turned bearish and then whipsawed and then bearish. But you have these swings, a downswing, an upswing, a downswing, and now we've reversed that downswing. So that's the first bullish signal. And then the second will either be a trend composite turning bullish or a channel breakout there. So here is the Defense and Aerospace ETF, or the Aerospace and Defense ETF, however you want to call it. But it was really lagging from the summer of 2021 all the way until January. You see that low in late January. Then we got a higher low, and then we got a breakout, and the trend composite turned bullish. And we identified this little flag here. That's a little pullback after the breakout. And now we have a flag breakout. So defense is leading with a bullish trend composite and that little flag breakout that I showed you. Elsewhere, we have XME. Now, XME is a little bit extended. Wrong symbol there. Let's try that one. And here is XME. And this one was featured in Arch Charts or Chart Watchers. Can't remember which one it was. But I was watching this consolidation and we got the breakout. And it was featured at the breakout. And trend indicators don't work when the market or the price action chops around as it did from September to February. Whipsaws are going to happen. But this is a clear breakout and we're clearly leading. So steel is definitely a place to be right now. And then the other one is related to agriculture. And we know that DBA, the agriculture ETF, is moving higher. And this is the Agribusiness ETF. And it kind of did the same thing as the steel ETF. You know, it had this long consolidation and it did have a breakout, but then it kind of moved back into a consolidation. It can be frustrating. Then got a breakout and a throwback. But, you know, it never broke down. It was frustrating, but never broke down. It had these breakouts and these pullbacks, but never broke that big support zone and now surging to new highs. So this is a leader as well. Now, these might not be buy opportunities right now. It depends on your trading style. If you're a trend follower, you'd be riding these trends with wide stops. If you're more of a position trader, you'd be waiting for a pullback. And that's what I'll be doing. I'll be looking for pullbacks within these leading groups to play in the coming days, weeks, and months. So if you'd like to know more about trendinvestorpro.com, you can click on the link below in the description. Again, if you like this video, please give us a thumbs up and consider subscribing to StockCharts. Thanks again for tuning in. Have a great day, and I'll talk to you again next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.